Hello, and welcome to another episode of the US Market Open. My name is Rufas Kamau, market analyst with FX Pesa. So, feel welcome. We'll be looking at the current events happening surrounding the US market, and at the same time, we look at the key price levels in the major currency pairs. That is mainly Euro USD, Pound USD, USDN, and USD CAD. We'll look at the indices and also a couple of commodities, see how they are performing and how we trade these forward. So I'd like to begin by noting that this is not investment advice, neither is it a recommendation to trade. So you should do your own research and at the same time, practice risk management at all times. So before I proceed, I would like to do a mic test. So if you can hear me clearly, kindly type hi on the live chat, and these will confirm that everything is working just fine. All right, so let's proceed. So I'll be diving right into the charts. So the very first thing to notice is the US dollar index and the strength it has shown over this week. So clearly, you can see the performance today right from the beginning of the day. So the dollar index opened here, went up, then down, then proceeded to push way higher before pulling back down in the last 1 hour and also in the current hour. So yesterday was a strongly bullish. So we saw a very strong bullish momentum, indicating that the dollar is strengthening further. So this is more or less like a recovery, considering what we've been seeing in the past couple of weeks. So the same case happened on Friday and Thursday last week. And this was indicative of a dollar that is regaining strength. So if you are to zoom out and get to the forward chart, then you can see the last couple of weeks and how the dollar was weakening. So the last time we saw a high on the dollar, this was on 14th of July. Since then, you can see the dollar proceeded weakening against other currencies. Further weakening for the second week, third, fourth, and fifth straight week, the dollar was just going down before rebounding this week. So there's a critical trend line that has been broken here. And it seems that like the dollar is continuing to be stronger, and we could see some further strength going into the rest of the week. So that's one thing to consider currently happening in the markets. So with that in mind, then it makes a lot of sense to look for positions where you are long the dollar and short a weaker currency. In that case, you have a better probability of making some pips in these markets. So let's start with the Pound USD. The Pound USD was completely bearish for quite a period of time. I'm looking at the forward chart. So if we trace all these back to the beginning of my trend line here, we are looking at 16th of November last year. So for the better part of this year, the pound has just been weakening against the US dollar. So the main reason for this is because the dollar has been stronger and faster. So the Federal Reserve Bank of the US have been raising interest rates at a much faster pace compared to other economies. So when you look at quantitative tightening, it's faster in the US compared to the UK and other economies. So how this is interpreted is a stronger dollar against the pound, which is very evident for the entire year. But now, recently, you can see that the pound started strengthening against the dollar. So we had a good number of weeks, I think about 3 weeks. You can see the movement from here up to the upper trend line, breaks to the upper side, gets to resistance, and then pulls back to the trend line. Rise last week, and then for the second half of the week, goes back down, and now we are completely out of this particular structure here, and a new structure is forming here. So the easiest way to identify a structure in the market is by focusing on the different swings. So let's try a very quick indicator here. We insert, go to indicators. You'll find these on your custom menu and go to the Zigzag Indicator. So let's try and use the zigzag. So a zigzag indicator will just simply show you the different swings in a market. So you are able to see this swing, visualize this other swing, this swing, and this swing. So the key thing to note is that between this high of last week and this other high of the other week, and if you stretch this backwards, you'll notice that it's a point or location that has been playing out a couple of times. So if you were to stretch this line future, then you'd have an expectation, especially when prices would be trying or attempting to get to that level. So on this lower end, we have this point here and this other point here. And if we combine them, it seems like the market is in an early mode of making sideways momentum, or what we describe as a consolidation. So from this week right here, you can notice that the average directional movement of the pound is in that direction. So let's try and change this, make it a stronger shade, and also a thicker line. So using brown here, and I do the same for this other line. So brown, thicker line, and that's it. So from this week here, you can see the swing to the upper side, swing down, swing up, swing down. And now it seems like the market has bottomed and might be headed higher for another swing towards the upper side. So there's a good chance that the pound may be trading this way as we head to the Jackson Hole's Symposium, which is a key focus of trading this month. So the Jackson Hole Symposium will be happening from next week, Thursday, Friday, and Saturday, where major economic leaders in the world, including central bankers, will be meeting to discuss policy, and this could have a significant impact in the market. So as for now, the key thing to take is that on the 4-hour chart, we have a very interesting pattern, and this is often described as a tweezer bottom. So we have two candlesticks that are almost equal to each other, a slight advantage for the green one, indicating some bearish and bullish engulfing, and also two long tails towards the lower side, indicating a rejection, a double rejection of lower prices. So it could be the bottoming of the pound, and we could see the market now start to moving towards the opposite direction. So a very interesting area to look for a position. So as we proceed, if you have any questions, feel free to raise those questions, and I'll be responding to those questions right away. So hello, Charles. Hello, Chris. Welcome to the session. So previous two candles on H4 qualify for tweezer bottom. Yes, definitely. That's my reasoning exactly here. We are seeing a tweezer bottom, and this could be representative of a rejection of lower prices, and we could be seeing the pound start to rally against the US dollar. So now we move on to the Euro USD, a very consistent pair here. So it has been strongly on a bearish momentum, very similar to the pound. So as already mentioned, the main reason for this is because of the Federal Reserve Bank monetary policy, which has been very aggressive in quantitative tightening, removing all the stimulus of the US economy and raising interest rates, which has had significant pressure on the stock market, but on the other hand, strengthening the dollar. So a strong dollar has pushed the Euro USD to unimagined levels. And by unimagined, I'm talking about the parity level. Parity is where the Euro USD is trading 1-to-1 to the US dollar. So if you check the exchange rate and you check out the parity level, it's somewhere around here. This is parity right here, just around here, where €1 is trading at the same exact price as $1. So this is something that we experienced here. The date was on 14th of July last month. So the market prayed here for a while before strongly bouncing from 0.995 and going up for like half a week, then trading sideways. This lasted about 9 days. So remember looking at a range here. So let's try and get back to this. So the range was very significant, where the market was trading inside a rectangle for an extended period of time before it broke outside that particular range. So this is what we were experiencing some time back, and this was in Euro USD. So notice the direction of the breakout was towards the upper side. So from the 4-hour chart, this is how it looks like. So a period of 3, almost 4 weeks, where the euro is trading sideways manner against the US dollar before it broke out to the upper side. So immediately after the breakout, the market went straight towards the upper trend line, found a very strong resistance. So if you focus on the candlesticks, you are able to understand that the first spinning top candlestick, which looks more like a doji, indicates a very strong rejection of higher prices and a signal that the trend is weakening and you could see a reversal. So the market pulled back down for a while before pushing back up, then forming another very strong indication of a bearish reversal. In this case, we call this a bearish engulfing pattern. So from here, notice that after the Euro USD hit this resistance, which is a longer term resistance. So if I zoom out, you'll notice this has lasted over a year. So after getting to that trend line, there was a very strong rejection and the market kept dropping since then. So this was mid last week. And then there was this week opening strongly bearish, indicating a very strong dollar, kept going down up until the current price level here. So it seems like the euro is taking a breather from the downwards momentum. So from the last 1 hour in the current hour, it seems like the euro is pushing back up. However, in the long run, personally, I'm still bearish on these. I am expecting the euro to continue losing to the dollar. So maybe some further downwards pressure towards the 1.0 parity level. So this is still an idea, but then the breather has to be taken. Sometimes when the market is going down, doesn't do on a straight line. Sometimes there will be pullbacks before the market continues along that direction. So it's a welcome breather. Maybe the people who shorted here are taking profits here, but as the market goes up, I'll be looking for more opportunities, short and target the parity level, which is 1.0 level here. So I'm expecting that the market has remained in structure and may continue to do so until we get to the bottom of the 1.0 level. So now that being mentioned, I'll move on to another very strong currency pair, and this is the Swiss franc. So the Swiss franc has been quite strong against the euro, but now also it's a victim to the dollar. So as already mentioned from the first chart, the dollar index is very strong, meaning that the US dollar is strengthening against other currencies. It's also strengthening against the Swiss franc. So for this one, notice the swings. We have had some very interesting swings happening on the 4-hour chart. So with the first top experienced here in May 16th, a bottom here happening on May 27th, before another high was experienced here in the 15th of June. So the three swings were very strong, indicating weakness in the trend. And now if you look at the moving averages, they're indicating slowing volatility, but at the same time, a change in the trend. So from this high of the moving average, this is indicating lower highs and also lower lows, which is indicative of a bearish trend. So if you compare the highs, these tend to be getting lower, the lows are getting lower. So the most important part of this chart is the blue trend line here, which connects the low that we saw here versus this low, and then this current low here. So the market broke towards the lower side. This last week didn't last long there, pulled back up. Then this week started very strongly with a sequence of bullish candlesticks, which looks more to me like white soldiers, indicating a very strong momentum towards the upper side. So since then, for the entire week, we are seeing some very strong bullish momentum, and I'm expecting that the US dollar will continue pushing higher. So when you talk about resistance, we don't seem to be having a major resistance up until 0.96489. And this is a high that we experienced 2 weeks ago. So if you look at this high here and this high here, then you extrapolate, then this is quite an expectation that the US dollar will be against the Swiss franc up until we get to that level. So sorry for that for a moment. So a very interesting movement and expectation in the US dollar against the Swiss franc. So as for the Australian dollar, a very interesting pair here. So you can see it has been making some major swings. So if you can capture one good swing, then you can ride some good number of pips. So longer term kind of a bearish trend holding here. So every time the market has accelerated further away from this trend line, eventually has been pulling back down to the same. So from a daily time frame perspective, you would notice it's a bearish trend that started somewhere around here. So we are looking at the 1st of March last year. So literally for about 2 years, the Australian dollar has been losing to the US dollar. So this being mentioned, now we look at the shorter term structure. So I'm trying to zoom on these and identify major price levels that have been holding. So it seems like a channel with an exemption here, where for an entire month, this is the half of February, market was going up, sorry, half of March, then half of April going down, then got back to structure, started obeying the highs and the lows yet again. And the most recent price action is the most important one, indicating a very strong bearish engulfing, and this is on the daily chart since yesterday. So from the forward chart, this is how it looks like. So a market that was accelerating towards the upper side. So we can see the sequence of highs and how they were following each other, getting higher and higher, and also the sequence of lows that were getting higher and higher. And then the market hit the upper trend line around here. Notice it did not exactly hit on the upper trend line, but since then, the market has been accelerating downwards, indicating some downwards pressure right after hitting the upper trend line here. So there is the possibility that the market could retest the area again and get to the actual trend line. So there is this possibility that the market could get back here, retest the trend line yet again. And also there is still the possibility that the market could just obey the current strength of the dollar and just head straight downwards. So a very interesting chart to watch, waiting to see what might happen going forward, whether we are retesting here or even going straight downwards. So a break on this trend line might be indicative of some further bearish momentum, and also a retest might give an idea to, let's say, look for a position somewhere around here. So a very interesting pair. That's the Australian dollar against the US dollar. So there's always patterns within patterns. So for instance, I just want to show you something. So the first time here, the market found resistance, went straight down, but then it went back to the same level, tested the area. After retesting, then it made the actual momentum downwards. So sometimes there's this second retest. So after we say the market has tested this trend line and went down, sometimes you might see the market going back to the same level retest before continuing to push down. So as for the US dollar against the Japanese yen, some strong momentum today. So this is where the market opened, went down for like 3 hours before pushing all the way up. So one thing is clear, we have a very strong resistance somewhere around here. So an area that the market was consistently trying to break failed before pushing back down. So now as the market accelerates towards the upper side, so this might be an interesting area to look for a reversal pattern and also a potential trade towards the lower side. At the same time, if there's a break, then you look for a bullish position. So on the forward chart, if you zoom out and you try and check how the chart looks like, it's a very, very strong bullish momentum, followed by a consolidation for a couple of weeks. Another bullish momentum, sideways momentum for a couple of weeks, upwards momentum before the pullback run for 3 weeks. So now the market is making swings. So just want us to focus on these 3 weeks where the market was going down, a pullback, gets to this resistance, pulls back down, and then up. So you will notice that since this sharp momentum here, the momentum upwards doesn't break the previous high, and the momentum downwards doesn't break the previous low, indicating some kind of sideways momentum in this chart. So if you check these, it's something like this. But then if you look at the lower side, from this low to this other low, it's something that is seemingly taking this particular direction. And this is happening on the forward chart, with the current candlestick indicating a break towards the upper side. So very interesting movement here. Could be indicatives of some further upside in the USD Jpy currency pair. Following the original thesis here, the dollar is very, very strong in the market and could continue being strong for the rest of the week. So following by that assumption, then there's a good chance we could be seeing the dollar strengthening against the yen further, maybe even towards the previous high that we saw last week here. So as for gold, Gold is on a bearish channel since hitting a multi-year high, and this was on 8th of March this year. So since then, you can see the recent swings, goes down and then up and then all the way down, up, down, and now it's trading at a very interesting level along the upper trend line. So there was a pattern within a pattern. So by narrowing to a smaller time frame, in this case the 1 hour chart, this is what we have seen in the last 10 days. So gold trading around a rising wedge. So volatility kept weakening and weakening up until it could not bear more within that pattern, and it broke that pattern yesterday. So immediately after breaking, there was a further acceleration towards the lower side. So the market pulled back up, traded sideways for a while, and today it seems like there's a good potential we could be seeing some further downside in the gold prices. So the idea is that the market has hit a major resistance level. So this is what we are seeing from the 4-hour chart, and we could see the price continue to fall back down. So this is based on the basis that the dollar could continue strengthening. So if the dollar continues strengthening for the week and it also strengthens against gold, then this is the expected momentum. So maybe or perhaps for the rest of the week, we could be breaking last week's high or even the previous week's high. So if you are a shorter term trader, then a nice target is last week but once low. So it's somewhere around here. So around 1753. So if gold happens to continue pushing down, then 1753 might be a nice target. If you're a longer term trader, then perhaps even lower, as we are looking at the potential momentum towards the lower side. So as for commodities, they seem to be taking a step off the gas. We have seen these happen in coffee. So notice coffee has been on a bullish channel, going up and then down, up, down along these two trend lines. Then we had a very interesting pattern here. This was 2 weeks ago, forming an evening star. So it's a sequence of 3 candlesticks. The first one is strongly bullish. Second one has a very small body, low volatility. That one, very strong momentum towards the lower side. So from this evening star, we have seen the market attempt to go down, push back up, open the week down, attempt to go up, and then push down lower. So there's that potential. Sorry, not this is a week ago, not 2 weeks ago. So this was the price action on this was Friday. Monday, this was the opening and closing. Tuesday being today, it seems that we are taking on a pattern that is attempting to push the prices back down. So as for cotton, it's flying high. It's very strong. So we have seen, I think, over 30% gain. And this is from the 15th of July. So in about 1 month, the cotton prices have already gone up by about 43.15%. So these are very strong momentum, and it is bound to affect stocks that mainly deal with cotton products. So if you are into that, you can do some further research and identify the right opportunities for you. So as for the USD CAD, interesting currency pair, we have seen some recent momentum over the US dollar strengthening against the Canadian dollar. Before we saw these happening since yesterday. So market accelerates, gets to the upper side, then starts moving sideways. So what this looks like, it's what we definitely call a flag. So if you go to a smaller time frame and you zoom in out, you will notice that the flag has a flagpole, very strong momentum, almost vertical in nature. And then the flag is formed by the sequence of movements that form proceeding highs and lows along a particular path. So this is what we're experiencing with the USD CAD currency pair. And this is on a 15-minute chart. So whenever you have a flag pattern, it's often considered as a continuation pattern. And we expect the market to continue moving within the flag until at one point it breaks the flag. So the trading idea is often taken if the market breaks the flag. So if it's the upper side, it's a bullish trade. Then if it's up to the lower side, then it's a bearish trade. So the best idea would be if the market breaks the upper side, and then we look for a significant opportunity similar to the flagpole. So if the market breaks to the upper side, there's a potential that it could make a similar move equivalent to the flagpole here. So a very interesting market to watch. Just watch the 15-minute chart and identify the direction of the breakout. So I'll be checking to see if you guys have any questions and see if there's anything unanswered. So a good one. Interesting. How about the minor support over there on USD CHF? Could be retested too. So let me check. US dollar against the Swiss franc. So I start. Yes, I understand what you're talking about. So there was a very strong deceleration towards the lower side. Market hit a bottom here before putting back up. So now after the sharp drop and the recent push towards the upper side, the question is about whether the market could go back to the minor support. So the minor support is the level indicated here as the low here. So the question is whether the market will test this area before going up. So yes, it's a valid concern. The market could actually drop back. Remember, this is yesterday's high. The market could drop back to test this area before continuing to push higher. However, judging from the momentum of these three candlesticks highlighted, I doubt there will be time for that. So notice that the market opened with a gap towards the lower side, closed the gap. The following hour, that is set of 4 hours, kept pushing higher. Then the third 4-hour candlestick, very strong momentum, pulled back, didn't manage to form a new low. The next one strong, and every other proceeding candlestick has been considerably stronger, pushing the prices higher. So there is a good chance that the dollar could just fly away without retesting this area. But it's also a valid concern. If it retests, then also a good opportunity to go for an entry. So a very interesting idea. The other idea is that if you decide to go for a bullish position here, then the stop loss could just go below this minor support here. So if you set a stop loss below this minor support, then there's a good chance it wouldn't be hit and we could see the market continuing to go up higher. So thank you for the question and the concern, very positive. So any fundamentals affecting the USD JPY, despite the slowing economy in China and also in Japan, we are still seeing a much weak outlook in the Asian currencies. Well, stronger currency is expected for the currencies or for the central banks that are very aggressive in raising interest rates. So we have seen aggressiveness in the UK happening in the US, but also the Swiss franc. So those three sets of currencies might be strong and continue to be stronger. So we have seen also some level of aggressiveness happening in New Zealand, and this could strengthen native currencies. So as for now, the focus remains on the US dollar strength since this is identifiable directly from the US dollar index and how it has been performing. The breaking of this trend line is quite significant to maybe push the dollar higher, and this could be a key thing to base on your weekly trades. So the trades you go for the rest of the week, they could be based on a very strong dollar. So pairing these with weaker currencies would yield some good results. So lastly, as I mentioned, we will be looking at some indices. So I'm just focusing on the major indices. So let's look at the Dow Jones, the Nasdaq 100, and lastly, I'll be looking for the S&P 500. Is that just a moment? So here it is. So we have the chart of the S&P 500 on board here. So we just go to the 4-hour chart and then try to understand what's happening here. So some good momentum for the last couple of weeks. I'm talking about 1, 2, 3, 4, 5, 6, 7, 8. This is the 9th straight week. We are still seeing some very strong bullish momentum in the S&P 500, indicating that there's a very strong force supporting the growth of the S&P 500. However, from the technical chart, it's very important to notice that there is a potential resistance happening on the upper trend line. So remember, this was an all-time high happening on the 3rd of January this year. So since then, the S&P 500 has been on a bearish momentum. So on the lower side, this is what we are experiencing here. So also a nice trend line seems to be widening, meaning that we are seeing much higher volatility on this particular index. So from here, notice the rise has almost approached or almost hit a major resistance level. And it's also expected that we could see a breather here, the market going back in the opposite direction. So as long as the S&P 500 gets to the upper trend line, I'm talking about somewhere around 43.40 price level, then some major resistance here could act as the new support here. So this was a resistance here. So if the market gets to this area, this is the area I'm talking about, 43.40, then a pullback towards this area might be an expectation. So in the short run, that is for a person who is trading for a shorter duration of time, let's say you're looking for a day trade, then this might be an idea. So just trying to adjust this. So this is what we have. So the market could just rise and get to 43.40, but once it gets to this area, I believe this is the most critical price for the S&P 500. Then the expectation is that we will be seeing the prices start or begin to fall back. So for now, it's a sideways momentum, nothing much happening today in the S&P 500. So even being in the New York session doesn't mean much. So we are already seeing what looks like a flag here. So we are looking for a shorter term trader. For a shorter term trade, this is the area. So this is what we are seeing. So since the beginning of the day, nothing much, just to and fro from these two trend lines, just playing within these. So if momentum kicks in this market, then it will be a clear break either to the upper side or to the lower side. So in this case, judging from the current candlestick here, I'm expecting a breakout maybe in the next 15 minutes was the upper side, and then some further acceleration. Remember, 43.40 is the target here. So if there's a breakout, you could hold on to the trade and target a much higher price. So for the US Tech 100, very strong correlation with the NASDAQ 100. So we are seeing something similar. So even in the 15 minutes chart, we are still seeing the same idea play out. So market is trading in a sideways momentum, more or less like a flag. So there seems to be some volatility happening. If you look at the price action, so maybe at some point you'll be seeing a breakout. So some of these consolidations can be short. So just to give you an idea of what I'm talking about. Sometimes the market will just do this for a while, just play within two lines, and then immediately after the break, you could see a retest or a straight up acceleration. But the idea is that if you trade the breakout, you could capture a move that's a significant move such as this one. So this happened yesterday, and now the market is forming another pattern here, and you could see another significant move towards the upper side if the breakout is to the upper side. And also if the breakout is to the lower side, then something similar to that. So last three, the US Tech 30, or not tech, but industrial. So we are looking at the Dow Jones 30. So from the forward chart, something similar is happening. So notice for this one, the flag did not last for long. So we are already seeing signs of breaking this flag. So from this point, going this way, seems like our flag is following this particular path, and on this other side, this path. So the current candlestick, if it closes above that trend line, it's indicative of a breakout to the upper side, and we expect a similar momentum. So just to put the same in perspective, we had this some time back. Notice how it played out. So market broke to the upper side. Notice the candlestick that broke outside. So after crossing outside the consolidation here, then there was some subsequent momentum heading all the way up. So this was the proceeding movement right after the breakout. So sometimes when you're able to capture such a breakout, then you can cash in some good number of pips, and that is within a couple of hours. So also a very interesting play in the US 30 or the Dow Jones 30. So a good question from Godfrey, and thank you for this. So you write a thread about Jackson's Hole symposium coming up. Can you explain it further and how it may affect the market? Thank you for the question. I think this is the last thing I'll be doing today. So the Jackson Hole symposium, it's held in Wyoming in the US. It's an annual event, a meeting of central bankers, among other top-level analysts in the market. They meet every year to discuss economic policy. So the main discussions will be surrounded around a theme that is decided every year. So one year they could have a theme about interest rates, another one quantitative tightening, quantitative easing, among other themes. So on this one, it will be happening next week. And there are 120 invited people representing various regions and also central banks. So investors will be focusing more on two central bankers. One of them is the Bank of England governor and also the Federal Reserve Bank of the US governor. So they will be presenting in the meeting. It's not public, it's not live. However, the participants tend to share information outside from within the premises. So we get a lot of updates from there regarding the economic policy, what they are looking to do. Let's say the Bank of England governor will be saying, this is what we are looking to implement in the UK. This is how we are looking to, let's say, solve the problem of inflation. This is how we are looking to solve the problem of energy prices. This is how much progress we have made with Brexit and so on. So we will be looking at insights about further economic policy. That is from the Bank of England governor and also the governor of the Federal Reserve Bank of the US, the chair. So very interesting meeting, since there's a lot of participants, key level participants that make key decisions in major central banks. So this has the potential to cause a lot of volatility in the market, and we'll be following this closely to see updates from the participants and see how it influences the markets. So, for instance, right now, if you look at the US 30 and how the market has been moving, it's very technical. And by technical, you can see the technical price level, and you can easily track these price levels to speculate and make trading decisions. So you can already see, let's say, from this low to this low to this other low, using these and these, you can predict these and also these. However, when the markets are highly moving as a result of fundamentals, sometimes the technical levels are not respected and you can see a lot of volatility. So it's very important that you follow the Jackson's Hole symposium to learn about the updates, understand what the updates means, so that you can use them to establish a bias as you look for your technical trades. I hope that helps in the explanation. So thank you very much, guys. Thank you for your time, and also thank you for your participation. I hope to see you guys on the next session. So also remember, especially if you're a beginner, we have a series called the Novice to Pro series. It's available on the FX Pesa YouTube channel. So if you go to FX Pesa and then you check the YouTube channel, you should be able to see the series. So currently under episode 4. So I'm hoping everyone can see this. So I'm trying to share my screen, browser, go to YouTube. So from YouTube, head straight to FX Pesa. Just type FX Pesa. Then once this loads, click on the channel, and then head straight to playlists. So from the playlist section, notice that there is a playlist that is labeled Novice to Pro with Rufas Kamau. So in this series, I'm looking to cover all the basics from being a beginner trader to a professional level trader. So it's a 10 episode series. We've already done 4 episodes, 6 to go. Hopefully this will be helpful to you, especially if you, let's say, are watching this video and are not grabbing some of the concepts. So hopefully you'll go through it, get to gain from it. Then we meet on the next session. Thank you very much, guys. See you on the next session.